Let's talk Japan and Japanese markets. We'll speak to an outperformer. Curtis Fries, chairman of Prospect Asset Management, joins us from Tokyo this morning. His Pomo Long Funds topped the 558 Japan-focused funds that primarily invest in equities. His Prospect Japan fund returned 36%, the fourth best performer. Curtis, good morning. And first off, is Japan still the market to be in? I mean, given that you can get better returns in China, India, and some of the Asian markets, and given the lack of catalyst for economic growth, the recent spat of quality crisis in the country involving the likes of Toyota and Honda?
Well, I think Japan is finally getting its fair share of attention. It's been a year in coming. Last year, of course, India, China, other markets, Brazil, were the focus of global markets. Japan performed the worst of all the major markets. This year, I think there's catching up to do. I think domestic individuals are noticing they've been buyers of Japanese mutual funds, net buyers for 9 months now. And then the foreigners joined in about 2 months ago and have done some of their biggest buying in about 3 years. So it's time for Japan.
Curtis, oh, sorry, Haslinda, go for it.
Will Japan outperform the rest of the Asian markets this year?
I think it will. I think risk-adjusted Japan is very attractive. It's much better valuations. The cash flow is strong. There's very little need for new capex as opposed to other economies. That cash is going into major acquisitions. It's going into buybacks. There's a lot going on in Japan.
I'm going to butt in now, Haslinda. A recession forced a lot of Japanese companies to look to mergers because, the domestic market was weak. But Natori and Kirin just said that they're not going to merge anymore. And Nikkei News says that Shinsei has decided to sell shares instead of merging with Aozora, not confirmed by the bank. But do you think the recovery is persuading companies to forget about M&A and instead look to raise cash elsewhere?
Well, actually, I think M&A is still a very strong possibility. I think, for example, the Kirin and Natori merger, I think the focus now is on merging with overseas players. Both of them will be buyers, and they have been buyers in the past. So to say that they're giving up on mergers, I think that misses the point. They have very strong cash flow. They don't need to merge with each other. They can actually be strong buyers in overseas markets.
Now, you like Natori, the furniture store chain. We did see a slight rise in consumer spending, 0.7% quarter-on-quarter. A big fall in housing investment, though, and talk of the government raising sales tax. How does this affect your view of domestics?
Well, that's what makes Natori so surprising. In the face of one of the worst condominium sales, one of the worst housing markets on record, Natori's sales are up 16% year-on-year. Its earnings are up 40% year-on-year. This is in the worst environment for Natori.
And in terms of Natori, how much more upside are you looking at? I mean, it hasn't done very well this year. Yeah,
well, I think that's the point, is it's been ignored. I think the fundamentals suggest it could double from these levels and still be one of the cheapest stocks in Japan. So I think that's one reason why I'm so bullish, is that some of the best stories have yet to be told.